Good evening, everyone. Welcome to our webinar for this day, the 6th of December 2017, the last one of the year, as Catherine said. It's been quite an interesting month. I've no doubt you are aware of that. Obviously, everyone's attention is on the ANC's elective conference, which is due now in December, in a week or two. This is an extremely difficult thing for private investors to actually predict. And to take into account in their investment strategy. It seems to be a two-horse race between Ramaphosa and Dlamini Zuma, and Ramaphosa at the moment seems to have a slight edge, but I can't honestly say what I think will happen here. It's very, very difficult to know what will occur. What I can say is that I believe that if Dlamini Zuma is appointed, then that basically will destroy the ANC finally, and that will happen obviously in the 2019 election. If Ramaphosa is appointed, then I think that the ANC have got a chance of staying in power in 2019. He certainly is a business executive, he understands business, he's not open to bribery because he's already worth over 10 billion rand in his personal capacity. So the politics is dominating the situation right now. And all this time the economy has been battling along, trying to keep going during these difficult times when consumer spending is very low and we seem to be constantly scoring own goals as far as the economy is concerned. However, I noticed that the trade surplus of 4 billion rand, which is the fourth trade surplus that we've had in a row in the last quarter. So that's always a good thing. And obviously that reflects what's happening in the commodity market. Commodity prices have been going up, reflecting the boom in America and Europe and also in China. So we should be capitalizing on rising commodity prices. We are primarily an exporter of raw materials. And I think to some extent that is what is keeping business going. And of course we're having a very good agricultural season right now. And I think the rand's weakness has helped a lot for certain industries. It certainly helped the stock market. With the economy in the desperate situation that it is now, and inflation well below 5%, you would think that the authorities would put through an interest rate cut. But they can't really, because they're concerned that the rand will fall. They're concerned about the effect of ratings downgrades and also what might happen after the ANC's elective conference in December. Our esteemed Minister of Finance, Mr. Gigaba, now predicts that the national debt will go to 60% of GDP. He seems to be quite unconcerned about that. He's sitting with a 51 billion rand shortfall in the largely, or quite a percentage of that is just due to bad tax collections. And I believe that this will lead to a VAT increase in February. Fortunately for us, the Reserve Bank is still independent and they're keeping the currency stable, they're keeping inflation down, they're not allowing the government to print money to get out of its difficult situation, and that is something we should all be grateful for. I notice a few positives and negatives. The first the positive that I'd like to draw to your attention is the fact that Ford Motor Company, which is a big international company, have decided to invest a further 3 billion rand into their plant at Silverton. And this they're doing despite knowing about the downgrades and the bad news in South Africa. They're still investing 3 billion rand to upgrade that facility and increase the number of motor vehicles they can produce there. In fact, it's almost certainly going to be used to produce the new Ford range, which will come out in 2019. On the negative side, we have Eskom facing a really tough cash flow situation. The last time they faced a cash flow problem as bad as the one they're in now, the government had to inject 83 billion rand, and of that they wrote off 60 billion in the end. So obviously we don't want that again, but Eskom is really a mess at the moment, and it is probably the single most dangerous thing to the South African economy. And of course, all this bad news and good news is discounted into the rand. So I'm just going to put that chart on the screen. Let's see if I can find my mouse here. Where is it? I don't have a mouse. That's a problem. Okay, well, the rand has been strengthening. I need some help to get this chart on the screen. It was working just now, but it's not working now. Oh, wait a minute. There we go. There we go. We're in business again. Okay. All right. So let's go to the rand. Sorry for that interruption. Technical problems, you know. Just going to get the rand up. I'm going to put 5 years on the screen so that you can see the history. Now, if we look at this chart, I'm going to point to it with my mouse. Here you can see the long-term negative trend that I'm pointing to here. That's been going on more or less since Mr. Zuma became president. And this is where the rand has been weakening steadily. That's where Pravin Gordhan was appointed. That's where he's been dismissed. Sorry, we're just going to deal with that technical problem here. I'm not. All right.
Sorry.
Okay, so this is the long-term negative trend, weakening trend, against which is what we call the Pravin Gordhan line, where he was in office for a year. And then since he's been fired over here, we've noticed a sort of steady weakening trend in what we call a saucer bottom here, which shows a change in the direction. Recently, however, and you can see these 4 weakening bottoms, okay, where the rand is getting steadily weaker, and then it finally weakened up to here, and then from that point started to strengthen. This last little bit of strength is very interesting because, in my opinion, there's nothing in the economy which could justify that strength. And I'm ascribing it to what I call Ramaphosa optimism. Currency speculators who are hoping and expecting that Ramaphosa will be returned at the ANC elective conference in December. That is what I believe is driving the rand right now. And obviously there is quite a lot of optimism because the rand has strengthened all the way back here to below 13 Rand 50 to the US dollar. And obviously it's something we have to take into account. I believe that the rand is very underpriced in US dollars, but it's being kept there by the extreme risk which is perceived in the South African economy. So if Ramaphosa is returned, there is room for the rand to strengthen quite sharply. And obviously the opposite applies if Dlamini Zuma is appointed. But the rand is a very important element in the South African economy and of course also in the South African stock market. We'll come back to that point in a little while. Let us now look at Wall Street. Obviously, I don't know if I succeeded there. Here we go. Obviously, since I last spoke to you a month ago on the 1st of November, which was also the first Wednesday in November, the S&P 500 has strengthened substantially. So when we last spoke, I think we were here, right, on the 1st of November. Yes, that's correct. And as you can see, since then, the S&P 500 moved sideways for quite a while, even came down a little, and then accelerated upwards. This line up here is the long-term channel line, which I've spoken about, the 10-year channel line. The line down here is the first acceleration, and the line over here is the second acceleration. And as you can see, we broke up through this long-term upper channel line. That will become clearer in a minute when I put the 10-year chart on the screen, which I'm going to do right now. Okay, there's the 10-year chart, and you can see here's the upper channel line. There's the lower channel line. There's the first correction in 2011, the second correction in 2016. And over here, the first acceleration, this line, and then the second acceleration, which you can see takes it up even faster. And then there, what I've called the upside break, is the break above the upper channel line. let's go back to that shorter term graph, just the last year. Actually, let's make that 2 years, and it'll be easier for you to see. There's the upper and lower channel lines, and you can see here is a very clear break above the upper channel line. And this has got to do with the acceleration that is taking place on Wall Street. Wall Street is actually moving faster and faster as the US economy recovers. The S&P 500 is now well above 2,600. And obviously, we've just had the news about Donald Trump's tax, that the S&P 500 will go somewhere in the vicinity of 3,000. You may recall, those of you who've been reading my articles and listening to me for the last year, you may recall that in November of 2016, I made a prediction based on a point and figure horizontal count, which took the S&P 500 up to 3,027. So now the experts in Wall Street are starting to get to that place. In fact, Bloomberg in America does a survey of the leading investment strategists on Wall Street, and it always asks them the same question: where do you think the S&P will be at the end of 2018, so at the end of next year? In their most recent survey, the most bullish of those strategists said that the S&P will be at 2,950, just under 3,000. The most bearish said 2,500. What is interesting is that none of them are predicting a crash or a bear trend anymore. This is interesting because it shows you that the market is creating its own optimism, if you like. The upward trend in the market is beginning to become self-fulfilling to an extent. So we anyway believe that the prediction that the S&P 500 will go above 3,000 is in fact very conservative. We expect it to go well above 3,000. We don't know how far, but well above 3,000. And what we believe that we are seeing here is the change from a gently rising S&P to an accelerating S&P where the momentum of the US economy and rising profits amongst the S&P 500 companies will drive this index up faster and faster. Okay, of course, this bull market is being driven by really three things, three underlying fundamentals. The first one, of course, is one which we've talked about quite a bit, is the quantitative easing, which America and Europe and China and other countries, Japan, did for such a long time. In fact, Europe is still injecting about 60 billion euros a month into the European economy. And that's money that they're just printing. They're printing it and injecting it. America has stopped its quantitative easing program, but the effects of all that cash sloshing around are starting to be really felt dramatically in the economy. So that's the first factor. The second factor is the drop in energy prices. We've seen the oil price drop from $115 a barrel in the middle of 2014 down to as low as $28 a barrel, and then stabilizing at somewhere between $50 and $60 a barrel, around about that range. Obviously, the oil price is now rising in response to the improved economy of the world. So there's greater demand from oil as a result of improved economic activity. But remember that the drop in energy prices doesn't only reflect oil. In my opinion, the improvements and efficiencies that have been brought into photovoltaics and battery technology are going to keep energy prices under pressure. They're going to keep falling. And I think eventually we will end up with energy at an oil equivalent of about $10 a barrel in due course. And obviously the effect of that on the world economy will be dramatic. So the drop in energy prices is not just about oil. It's also about the renewable energy that is sweeping the world. And I think will become more and more prevalent as time goes by. Then the third factor which is driving these markets is the massive efficiencies coming through from new technologies. Now, if you go back in history to the boom of the 1920s, That boom was caused by two major new technologies. First of all, the mass production of the motor vehicle, and secondly, the mass production of telephones. These two technologies increased business efficiency to such a degree that they caused rising profits in the American economy for a long period of time, for such a long period of time that eventually people forgot about recessions and they stopped talking about them. The stock market was in a permanent boom. Everybody was making money and everybody was getting into the stock market. So now here in 2017, we have a similar situation where the spread of smartphones and the internet has created such an improvement in communications worldwide that it is generating efficiencies of its own. All sorts of technologies are coming to the fore right now and improving the efficiencies and hence the profits of companies. You will have noticed that this boom in America, this rush up in Wall Street, has been mainly driven by technology stocks. So those technology stocks are obviously the first ones to benefit from the new technologies, but those technologies will spread out and improve the productivity and efficiency of all businesses in due course, and that will cause the S&P 500 index to go up faster and faster. Now, obviously, all of this printing of money, the quantitative easing that I've spoken about, should have resulted in inflation. I mean, that's the normal thing you'd expect. If you print a lot of money, you should get inflation, like Zimbabwe had inflation after Mr. Mugabe printed all. The reduction in prices which is being brought about by new technologies has offset the rise. Not visible. Not yet. It will become visible. Inflation will pick up inevitably sooner or later. But it's not visible yet, and I think that Janet Yellen and her successor will have to be very wide awake if they want to prevent inflation from taking off in America. At the moment, they are very dovish still. They're still looking to stimulate growth. All right, so that's just some of those things. Now I'd like to talk a little bit about gold, gold and platinum, in fact, precious metals. The South African economy was built on precious metals, particularly gold. We are very blessed in our reserves of gold, our underground resource of gold. The gold we have in this country is in conglomerate form, which is very unusual. Most gold that is found worldwide is in alluvial form. In other words, it's carried in a river, and that's why you always see in movies you see the panning of the sand in the river looking for gold. They pan the sand, and we don't do that in this country because the gold here is contained in a reef. It was actually laid down millions of years ago in a seabed, and that seabed it varies in thickness. Some places it's 20 or 30 centimeters thick, and other places it's just 1 or 2 centimeters thick, and it's like the cheese in a sandwich. It's like a layer, and it breaks the surface just south of Johannesburg, and it tips towards the south at an angle of about 20 degrees. So obviously, as you go deeper and deeper, you'll find that the grade improves. So at the surface, the grade is quite low, but as you go deeper in that seabed, obviously gold being very heavy, it fell to the bottom of the seabed more than it fell on the side. So the grade goes up and up the deeper you get. Now South African gold mines are mining gold from the Highveld here, and they're mining it 4,000 meters down. So that means that from the Highveld they're mining at 6,000 or 7,000 feet below sea level. And there are enormous problems with mining at those depths. First of all, the rock temperature is over 60 degrees Celsius, which is hotter than a human being can stand. So they have these huge crushed ice plants that pump ice down to the bottom of the mine, where it melts, cools everything down, and then they pump the water back up, freeze it again, and then pump it down again as ice. That's what happens at Mponeng. Mponeng is the deepest mine in the world, and it's 4,000 meters now down. You have to use 3 separate lifts to get to the bottom of that mine. But of course, the grade at that level is very good. And Mponeng is talking about going from 4,000 meters down to 5,000 meters. But there are huge problems, and it's very expensive to mine at those great depths. It's very labor intensive as well, which means that you have all these problems with unions and so forth. But South Africa still has more than 40% of the world's known underground reserves of gold. More than 40%. So even though we are now 7th as a producer in the world, we're the 7th largest producer in the world. We used to be number 1, of course. In fact, in 1970, South Africa produced more gold than all the other gold producing countries in the world put together. Today we are the 7th largest mining company, and we produced only 120 tons last year, which is miserable. 1970 we produced over 1,000 tons of gold. But what is interesting is that Anglo American has been working on mining robots that can mine underground, and they've made some very interesting breakthroughs. At a recent conference in London, Anglo revealed that they have produced a robot now which can chisel as well as any human being. So it can chisel rock away as well as any human being. And they said at this conference that was held this year in London, that in 5 to 7 years the mining industry will be quite unrecognizable because deep level mining will be done by robots. Robots controlled from the surface through visual reality. The implications of this for South Africa are amazing. First of all, it may quite well lead to us being the biggest gold producer in the world again. Secondly, of course, that mining will not be done by people. So the whole union situation in the mining industry will disappear. There will be no more mining strikes. And South Africa could easily become very wealthy just based on that. Don't forget also that robots can also be used to mine platinum. Platinum is quite similar to gold. It's also found at very deep levels. And South Africa has 75% of the world's platinum production comes from this country. The price of platinum has fallen like a stone. It's fallen from $2,273 in 2003 down to $933 now for an ounce of platinum. So obviously the platinum mines are taking strain. In fact, about 60% of platinum mines in South Africa are now unprofitable. Over that same period from 2003 until now, the rand has fallen from 8 rand to the US dollar to 13 rand 50 to the US dollar. So obviously that has helped to offset the fall in the platinum price and keep our platinum mines going to some extent. The problem with platinum has always been that there's been opaque stocks of platinum platinum ore which have been mined but not processed. And they're called opaque because nobody knows quite how big they were. Those opaque stocks were depleted quite substantially in the strike of 2014, which you may remember, the 5-month strike in the platinum industry. And they are much reduced. But the platinum price is still wallowing around $920, $930. The main demand for platinum is from auto catalysts, the car market. And of course, as the world economy goes into a boom, so people will be buying more cars. A little bit further out, maybe 5 years or 10 years down the line, you've got to consider the possibility that electric cars will replace cars driven by an internal combustion engine, and that means no more auto catalysts. It might mean more batteries, and batteries obviously also contain platinum group metals to some extent. So all I'm saying is that there might be a short-term opportunity in platinum as the price goes up, reflecting the current shortfall. But eventually I think that the internal combustion engine in 10 or 15 or 20 years is going to be gone, and with it auto catalysts, and that means a substantial drop in the demand for platinum group metals. All right, that's what I had to say about those things. Now let's just turn our attention to some of the new listings. I have spoken previously in October. I spoke to you about the possibility of a listings boom, and we talked about some new listings. I'd just like to go and have a look at one of the ones that we spoke about, which is Long for Life. Here you can see Long for Life on the screen, and I explained to you how we made a mistake with Long for Life. We thought it was going to go really well, and we bought in over here at 650 and doubled our investment over there, and then stopped out of the share over here when it fell there. And then it went all the way down to this bottom point here, and now you can see it's made what we call a saucer bottom. This is an island or a saucer bottom, and from that saucer bottom it's starting to lift off. Obviously the institutional fund managers still believe in Brian Joffe. This saucer bottom has had very good volume, and of course it's been made despite the fact that Kevin Hedderwick has resigned. As I said, the fund managers clearly still believe that Joffe will make a success out of this business. They've just bought another acquisition called Chill, which produces beverages, and it's basically another plastic bottler. So he's still doing business. He's still out there buying companies and building up this share. So I think that now at these kind of levels, around 4.75 Rand, you might find that this is going to be a really good investment. The next investment I want to just consider, the next listing that I want to consider is a share called AYO, AYO, which hasn't yet been listed. It's due to be listed, and it's being spun out of AEEI. AEEI is already listed on the stock exchange. Let me just see if I can find it for you. It's an interesting company, and they are listing this company AYO. So they recently listed Premfish. So there's AEEI, African Equity Empowerment Investments Limited. Okay, and you can see how the shares moved up very nicely because they're spinning out these pieces of their company and listing them separately. So they listed Premfish. I spoke about that a couple of meetings ago. And they are in the fishing industry. Now they're spinning out their technology company called AYO, AYO. They haven't done it yet. The big thing that AYO owns is 30% of British Telecom South Africa. On their listing, they're hoping to raise between 3.7 and 5.7 billion Rand on listing AYO. I think that's a bit much. The company, they only value the company at 3 billion. So for it to raise between 3 and 5 billion Rand on listing seems a bit too much to me. My suggestion is you wait for this share to come to the market, watch what the market does with it, and then choose your moment if you want to get into it. Another interesting share that's coming to the market now is a secondary listing, this time of a company called Blackrock. Blackrock is a very well-known company. It's a massive European fund manager with $6 trillion under management. Huge. They are going to be raising 650 million Rand on the market when they list on the JSE. And obviously this is going to be a nice Rand head share, which will give you very good exposure to the European economy, which is growing quite nicely at the moment. The next one I want to look at is a company called Carp Agri. Now, Carp Agri we spoke about a little while ago. It's a spin-off from PSG, and PSG listings generally do very well. As you can see, since it listed, it has fallen from about 63 Rand all the way down to about 50 Rand. But now we feel it's found some support at this level and could do well in the future. This company is mainly in the agricultural sector. The headline earnings per share that they're projecting are an increase in headline earnings per share of between 16 and 18% for the current year. They've just made an acquisition in the fuel industry. Their objective is to make fuel distribution 30% of their business. So that's quite ambitious, I think. And I think it's a very good business. They've got a lot of agricultural stores, like co-ops in the countryside. So as the agricultural sector is doing very well, this is a share which I think will benefit directly from that. Okay, then there's a company called AlphaMin. Okay, AlphaMin. Obviously, I've put notes about all of these things in the notes which you'll be able to take. So you don't need to necessarily write everything down here. AlphaMin is a tin mine in the Democratic Republic of Congo. It's listed on the Toronto Stock Exchange. and it's seeking a secondary listing on the JSE. Now, obviously, this is about as risky as it can get, right? So when you talk about risk, here you've got a company that is not yet producing tin, but it will produce tin in the Democratic Republic of Congo, which is politically quite unstable, and they're looking to raise money on the JSE. But everything here is geared to the tin price. Now, the tin price has been going up nicely. And why? Because of obviously the boom in America and in other parts of the world. A lot more electronics is being sold, and tin is used very widely in electronics. So it depends very much on China and the growth of the Chinese manufacturing sector. China uses about 60% of the world's tin, and tin has gone up very strongly this year. So this could be a winner. But my suggestion to you is that if you want to buy it, you should keep a very strict stop loss. Okay, so that's just my observation there. Okay, now I can't go through this evening's talk without mentioning what happened to Steinhoff over the last 3 days. The share price of Steinhoff has taken a bath, as you probably are aware. For those of you who are not aware, but I mean, it's quite amazing what's happened to Steinhoff in 3 days. There it is. You can see there. Look, the share has been falling for some time. If I put 2 years data on the screen, you can see that in March of 2016, so it's just about 15 months ago, the share was trading for 96 Rand a share. And it was trickle down, losing value all the time. And down here it was about 55 Rand a share, right? And then suddenly, over the last 3 days, it's dropped from 55 Rand, and today it closed at 20 Rand, I think. No, 17 Rand 85. So from 55 Rand in 3 days, it's gone down to 17.85. Now this is supposed to be due partly because the Germans have found a problem with the Steinhoff financials. They're saying that that Steinhoff diddled them out of tax, so there's an investigation going on. But what really horrified the market today was the resignation of the CEO, who's a chap, Justa is his name. He's been involved in Christo Wiese's companies for a long time. Of course, Steinhoff is Christo Wiese's company. And his resignation has brought down many of the other companies like Brait and Star, which is ShopRite and Pep, and other companies which are aligned to Christo Wiese. In my opinion, this fall has probably been overdone. Probably. In other words, what you're looking at here is a share which has got, and I'm talking now about Steinhoff, it's got a net asset value of 57 Rand, and you can get them for 17 Rand 85. In fact, the share actually traded as low as 13 Rand 50 at points today. I cannot believe that much value has been wiped out off this company just because the CEO resigned. And I'm pretty sure that tomorrow you'll see a recovery in the price, most probably. But of course, it's highly speculative. The one nice thing about Steinhoff is it's got huge volumes traded every day. So from a private investor's point of view, this can be exciting. You can get in and get out. You can stop out of the share. But if you buy into the share, you must watch it all through the day, right through the day, minute by minute. And you must keep a very strict stop-loss strategy. All right, now I'd like to just talk about Naspers. Now, Naspers also came off in the last few days. And as you know, Naspers' main claim to fame is that they own 34% of a Chinese company called Tencent. I'm just going to put this in a candlestick. Right, so they reached an all-time record high over here at 4,090 Rand. 4,090 Rand. And at that high point there, that they were on a price-earnings ratio of 163. Quite absurd, really, when you think about it. Now the share has fallen. And it's come down here because of this whole story with ANN7 and the possibility that maybe MultiChoice, which is a Naspers subsidiary, might have paid off the Guptas through ANN7 in order to get bandwidth and so on and so forth. There's a whole story about that. But actually, I think the reason that NASPAS has come off is because the rand has strengthened. I showed you just earlier now a chart of the rand, and you saw there that in the last couple of weeks the rand has strengthened quite sharply. So I think that's had an impact on NASPAS and also on many other companies which have most of their business overseas. What you should understand is that even at the current level, it's still at a PE of just under 100. So that still, to me, looks pretty expensive. The problem with a company on such a high price-earnings ratio is that it, of course, is very vulnerable to any bad news. Doesn't matter what the bad news is. So we'll see. You know, the Americans are launching an investigation into NASPAS, and they're talking about a class action. So the Americans are quite serious about these things, and obviously that's had a bit of an impact. However, I don't think NASPAS will be going down for very long. If you look at the long-term position of NASPAS, here's the 10-year chart, looks pretty good, doesn't it? I mean, this little fall that we're looking at here might just be a buying opportunity. Then the last thing I want to do tonight, I'm sorry I've kept you for a long time, but let's have a look at one last thing. I did write an article about this, and that's Orion Minerals. This company produces zinc and copper. What they've done is they've revived an old Prieska mine, a mine near Prieska in the Cape. But what I want to show you here is that this type of opportunity to make a quick speculative profit in a share does not come along very often. As you can see, Orion Minerals was listed over here on the 19th of September, right? And the share traded for 24 cents for a long time. And as you can see, during this long period of time, the volume was very, very thin. In fact, the average volume was under 20,000 shares a day, right? And then suddenly, over here on this day, in October, the volume went from 20,000 shares a day on average to over 600,000 shares. The next day, the share price ticked up 1 cent to 25 cents, and again we had massive volume, over 600,000 shares changed hands. 2 days later, on this day, the share price went up again by another cent to 26 cents, and this time the volume was 1.2 million shares traded. Now that should give you your signal. If you were watching this share, that would give you a definite buy signal. If you were using an on-balance volume chart, you would see a definite signal on volume. Because what this process means is that over here you had people holding the share who didn't really want it, and then suddenly somebody came along and offered to buy the shares from them. And so they sold. And that's what creates this big volume. And when they saw they could get 25 cents, they got very excited and sold their shares. Over here, even more excited at 26 cents. So this is the smart money, or what we call the strong hands, taking all the loosely held shares out of the market. And that gives you a very clear buy signal. As you can see, the share went racing up here just a few days later, went to 164 cents. So it went up about 500% in a month. But what I want to show you is how important it is to look for small increases in price like we saw over here with massive increases in volume. That is your signal. That means the insiders know something that the rest of us don't know, and they're busy mopping up, they're buying up all the loosely held shares. The weak hands are selling their shares to the strong hands, if you see what I'm driving at. And then the profit comes. And of course, it was a short-term opportunity. You don't want to sit in a share like this. It's a highly speculative share. As you can see, since that peak at 164 cents, the share is now tailed off and it's trading for 38 cents now. But there was an opportunity here to make a very nice profit in the short term. Okay, ladies and gentlemen, I see I've been rabbiting on for about 45 minutes, so I'm not going to delay you any longer. Obviously, there's much more in the notes, and I do urge you to get the notes off your internet and go through them carefully. There's lots of other ideas in there for you to look at, and also, feel free to ask any questions that you may have. Catherine says you must just send them through on the internet, and it will be my pleasure to reply to you and answer your questions. Remember, the only question I don't answer is, should I buy this share today? Because, of course, I'm trying to teach you to make that decision for yourself. So thank you very much for your time. And I'll see you again. I'll talk to you again in the first Wednesday in February 2018, by which time a lot of issues will have been resolved.